Hey friends, it has been a rough couple of months in the stock market with what looks like the worst January and the worst February in like forever. Inflation is creeping up, interest rates are also looking to raise, and then there's the whole Russia-Ukraine thing going on. So what to do? On this video, I'll go through that, plus answering some of your questions on investing while I take a sip of tea. So let's go. So the market is collapsing. What should we be doing? I'll tell you what I'm doing, which was I said many times, it's for informational and entertainment purposes only. So this is not investment advice. I'm a random guy on the internet, so just do your own research. But with that said, I am continuing as if nothing had happened. So I keep investing every month with the money of Subsparing via Nordnet, doing specifically index funds and ETFs, and at the same time I'm continuing doing a little bit of crypto on Coinbase also automatically each single month. My take here is that it's just very hard to time the market. Could be that we have hit the bottom, it could be that the bottom is 2 months from now when we're going 50% more down, could be that the next month is going to be the best month ever, and the reality is that nobody knows. But if we do hit the bottom now, and there's some historical indicators that points towards that, big further drops are a bit unlikely. If we miss out on this recovery from the lows of now, you could lose on big profits as well, because normally it has been shown many times over that there's just a few specific days that basically make a huge difference into the performance of a single year of investing. And if we miss those days because we stop and let's say chicken out because the market is going down, that we could stand up to lose a lot of potential. So my take here is that it's better to dollar cost average, which means that let's say you want to buy a specific investment, you want to buy a little bit this month, a little bit next month, a bit the month after, and then then you might lose some good picks, you might miss some lows as well, but overall you're gonna be like, let's say spreading your risk around. The take on this as well is that eventually this will pass. It could take a while, but if you look into the last 120 years as any reference point, things eventually recover and the market ends up going up again at some point. For a bit more context, instead of just having me rumble on this, let's have a guy who probably knows a lot more than I know on this, like Graham Stephan, to just hear his perspective for just about 10 seconds to see what he thinks of the stock market. So let's go.
When you invest, as long as you're diversified within a good company or a good index, the best thing to do is absolutely nothing. Just keep holding, stay invested, and keep buying. If the market drops, that's your chance to buy more, and if it drops even further, don't panic and just keep buying as usual. Eventually things will recover. Now I know this sounds like the typical boring, repetitive investment advice that you hear all the time, but the fact is this strategy has worked over the last 100 years, so why fix what isn't broken?
Yeah, exactly. So the big story here is don't panic, don't consider automatic investments, just let it go. And don't be checking your investments all the time, because when it's a bear market or when things are not going so well as well, it's just a bit of a drag. But I did make one change on my overall investment strategy for this year. I thought about this already through end of last year, but I made more or less formalize it this year, is that if you have heard my overall investment setup, I normally spend 80% of my cash was going into buying index funds. Then you had 20% that was the spread between going into crypto or going into individual stocks, like for example picking an Apple or a Tesla and so on. Stocks were never over 10% of my overall portfolio, and even now they're like less than 5%, I would say. So just keep that in mind. I've never been too much into it, but in a crazy concept as it's now, and the market is crazy now, let's not kid ourselves. I don't feel confident enough buying individual stocks and making stock picks myself and have for now, what I would say, even more than 6 months, completely adding money into my Revolut account and completely stopping picking individual investments myself. So yes, I keep buying funds, I keep buying indexes and so on, but when it comes to individual companies, it's something I completely stopped. Even now, on top of that, I'm slowly liquidating some of my positions, meaning I'm closing some of these investments. For a bit of context, if you bought stocks in 2020 and most of 2021, it appeared that anything you bought would go up, especially if you buy anything with technology and so on. It was like kind of a Midas touch. I remember checking my Revolut thing, and it was like 50% up, 100% up, 80% up. It was like absolutely crazy. It was really insane at some point. Now it went the other way, right? So I have stocks in my portfolio like Palantir, Square, or Shopify that were almost around 100% up, and now sometimes some of them are like 50% down from when I bought in. So that's just bananas. I have some like Apple and Tesla, Airbnb that is still kind of doing pretty well, so it offset those big losses on the other side. But it's just too crazy to go from 100% to 50% down. It's like in just a couple of months, it's absolute bananas. So it's a bit tread very carefully here. While indexes are also going a bit wild, they're still doing that a lot less than when you look into individual companies. It's definitely not double up or not double down, right? So For now, what I'm doing is that, okay, I stopped, as I said, with individual sub picks, and for now I'm just going all in on just letting the funds go. And yeah, it might not be as high as, these 100% returns and so on, but overall, when you get like, as we did last year with indexes, like between 20 and 30%, that's still pretty good. If you want to stay in the loop on what are my specific investment strategy and tactics, even the specific picks I'm doing each single month when it comes to funds or the things I have on my Money Sparring, you name it, there's a free investment course that I have built up, and there's a link to that in the video description. If you join that, you'll get all that and more. Next up, I want to share a crypto fail story. I don't think you will have a lot of key takeaways from this, but it's more to share a story of what I'm looking at the moment in the crypto space, and then how much money I left on the table because I didn't action on something that looked on paper pretty good. So you probably heard about NFTs already. So NFTs, in my opinion, are cool stuff. It's not just a JPEG, it's just not a digital download. Like now they're being used as a key to unlock a lot of possibilities in what's being called Web3 or this, let's say, wider crypto space. I haven't bought any NFT yet, but there's one guy I follow for many years called Kevin Rose, which is the founder of Dig, and just an overall very cool guy, has done a lot of podcasts with Tim Ferriss, a lot of investments, like very, very smart guy. And he just launched his NFT called Proof Collective. And I joined, or I wanted to participate in the auction where these proof NFTs were being like sold out to the crowd. In short, you could have bought one of those NFTs, which give you a membership access to a community, or give you interesting activities to do, and like connection with Kevin and a lot of other things. That looks pretty legit for about 1 ETH, which at the time it was around $3,000. I thought about it. I was like, I haven't invested in NFT yet. To put $3,000, it's a lot of money. But in the end, I was like, okay, it's a lot of money. I'm not gonna do it. And I don't need a membership. I love the crypto space, I love NFTs and so on, but I just don't have enough time to dedicate to like really enjoy the most of this membership. And I was like, okay, I'll let it be. Even though I was, live on the auction for about 2 hours, whatever it was being on sale. Fast forward, a couple of months, not even that, it has been really not that long. And now this NFT went from being worth 1 ETH to being worth like between 30 and 40 ETH, which is like almost $100,000. And of course, like many times in the crypto space, it's not the first time like I'm feeling like a total loser because, an opportunity like this to basically double your money, not even double. We're talking about going from 3,000 to 100,000. We're talking about insane numbers, right? And just let the drink pass is like sigh. And again, when you're really so close, it's not that you hear about it after it was sold. It was like, I was there, I was in the auction, I was like, I don't think I should do this. The good thing about crypto is that there's so many opportunities like this coming through. When you see the good opportunities when you spend time, for example, like me, like following this guy and hearing all his podcasts, knowing what's going on, understanding what he's building. And then I was like, okay, I wouldn't buy this just to speculate, but I thought like, okay, I like this guy. I think he's trying to build something legit. This is probably going to go up in value. And I still thought like, okay, it's too much. I'm not going to go on this. And voila, here we are. A lot of money. Could have missed. I would have been a really happy guy already early into the year and probably offset all these crazy stock market losses, but yeah, there we go. Which investment books do I recommend? I'm filming a video about this shortly, so in the next couple of weeks you will see it in the feed, but in the meantime, let me give you the 5 concrete picks I am going to be highlighting in that video, though in the video I'll go into a lot more depth. If you are new to investing, I would start with just 2 classics, and these are The Richest Man in Babylon by George Clason and Rich Dad Poor Dad by Robert Kiyosaki. Now these are ultra bestsellers, and for a reason. If you have never invested before, and if you're really new to the world of investing and like basically starting almost from scratch, they explain you the concepts and strategies for long-term investment in a simple and compelling way. If you are more of a savvy investor, you might be thinking like this is too basic, but again, if you're just starting out and you don't really have a lot of knowledge and experience when it comes to investing, this is a very solid book to start. If you're a bit further ahead, I recommend 2 books which are not necessarily on investing, but they're just insanely good. And one is called The Millionaire Fast Lane by MJ DeMarco, and the other one is called The 4-Hour Workweek by Tim Ferriss. As I said, these books are not investment books, but they're just, again, insanely good. They're about giving you perspective of, like if the other 2 books I just mentioned before about getting rich slowly, these are about how you can get rich a lot faster. And the reality is that if you want to get rich fast, like investing in indexes and like investing in stocks and so on, it's just likely not going to be the case. And what these books give you is kind of the mindset and the things that you need to do in case you really want to get rich quick in a non-scammy type of way. What if you want to really lead like a rich life now, right? So they're fantastic to give you perspective. If you already have your things in place, if you already have your life put together, these are excellent books to basically give you the mindset to go to the next level. When you have gone through all that, there's a 5th pick that you should read, and this is called What I Learned Losing $1 Million by a guy called Jim Paul. The idea of this book is that there's like a million different ways to make money in the market. So in the stock market, buying options, buying commodities, you name it. There's, again, as I said, like a lot of different ways you can make money. But then when it comes to losing money, it appears to stem just for a few specific causes. So while there's, again, a lot of different paths to become wealthy, there are very few and narrow paths to basically lose all your money. Why not study that instead? So basically you improve your odds of not burning yourself out and then keeping yourself in the market for as long as possible. This is an excellent book, and if you follow a guy called Nassim Taleb, which is the author of The Black Swan, this is basically the only book on finance I have ever seen recommend him. As I said, I'm gonna be making a video very soon that's gonna be expanding on this in a lot more depth. It's gonna be a long video explaining the lessons and key takeaways, quotes from these two books and so on. If you want to get to that when it comes, make sure you click subscribe below, become a part of the channel, and you'll get notified when those videos start coming. The last question is that, is it worth to invest in Denmark when the taxes are so high? Good question, but yeah, I would say yes. So I didn't invest, and I specifically because I thought the taxes were insane, for many years when I should have like 100% invested. Instead, I was trying to see if I could find a tax-free way of investing, or I was giving money to friends that would invest in Malaysia or stuff like that, and I was like, had different setups. I was trying to find like loopholes and so on. And the real difference is that 100% didn't work. If you're just starting out, now it's actually a lot better than when I was starting out myself. Now you have this Actives Pareconto setup where if you max that out, like when you're young and you don't have a lot of money, it's gonna take you a little bit of time. And once you get to that, only 17% is also quite okay. And on top of that, once you get that in place, to then reach and start paying for this 42-45% range of investments, it's gonna take you a while. So in the meantime, things are not gonna be so bad. So I would say 100% go and invest. One more thing on investing is that when you invest in the stock market, unlike when you buy a house and so on, the investment is liquid in the sense that if you need to take the money out of the market in one day to the other, you can do that. Of course, you might have a very bad timing because, for example, if I would take the money out now that the market has been going down versus if I had taken it like 2 months ago, yeah, it would be a difference, right? But overall, if you want to take the money, you can have it in your bank account and ready to be used to, let's say, put it as a down payment for the house or pay for something that's important to you and so on very quickly. That's great. Personally, I really regret not being more into the stock market when I was in my 20s. I did spend and I had a lot of fun, but yeah, in the end of the day, it would have not been so hard to just put a little bit each single month to just on this instead of just waiting to have a big pot then to put as a down payment for a house and so on. Next up, in case you have not seen my video explaining the Danish tax system when it comes to investing, you should definitely check that out. The video gives a especially visual way to the different rules and regulations and taxes that you have in Denmark. And spoiler alert, there's a lot of them. It's very hard to understand unless you have it like this visual way presented. With that, thanks for watching, and I'll talk to you again next week.